Hello traders, how have you been trading? I'm sure this market momentum has helped you a lot to yield as much gains as possible. This is going to be a very simple video wherein I'm going to help you look into my approach of marking supports and resistances on charts. I'm going to dedicate this video to one of our mentorship traders. His name is Rohan Dhoot. He had recently dropped in a question in our discussion board. Our discussion board is wherein we discuss all various aspects of mentorship trading strategies and setups, wherein under supports and resistance he has asked us to show us more examples of supports and resistance so that it is easier for him to identify. So Rohan, this video is for you. Now, there are various ways, but I found over and over again that this simple horizontal trendline approach works the best for me. Now this over here, I have the daily chart of Kotak Bank, and whenever you look for supports and resistances in a chart, I would always suggest that start looking at the chart from the right hand side and move your vision to the left. Move your eyesight from the rightmost candle to the leftmost. Do not start looking from the left to the right. So when you do that, what you're going to do is, as I start from the last candle and I move my eyesight to the left, you're gonna visually, I'm gonna do it for you here, but visually you will do that. You will be marking lows and highs. You will be marking these lows and highs. Now I don't have to do this like this anymore. Neither will you probably have to do it after a certain degree of practice. But essentially what I'm going to do is mark highs and lows. Once you've done that, make sure that your chart has more or less, not too less information like this, not also too much information like this. Make sure your chart has more or less, I would say 9 to 12 months of information. Something like this is fine. All right. And then what you can do is you can start marking the ranges. And one important aspect about the market is highs becoming lows and lows becoming highs. Or what I mean by this is, let me figure out that path. Yes. So what happens is once a market makes a high and makes a higher high, and as it comes down, if this low, if this high holds, like this and not broken, this high has a tendency to become support. This is a polarity. And if this holds true exactly here or somewhere close to this price, if this holds true, then this uptrend, this is a confirmation, this is a sign of confirmation that this uptrend is intact. On the other hand, the opposite in a downtrend is as the market makes lower highs and lower lows like this, and as it bounces back, this zone of price ideally should act as a source of resistance. Not always, not exactly here, maybe a little higher, maybe a little lower, but as it comes to the vicinity of this level, it should face some degree of resistance, something like this. And if we find something like this, if you see that the markets have, the lows have become highs, this is the lows which has now become highs, this is a sign of confirmation that the downtrend is intact, the downtrend is strong, and the downtrend is likely to continue further down. So we will be essentially looking for that, and I will not be marking them with lines. Like for example, if this is a low, I will not be marking them with a trend line, with a straight line like this, because time and again you'll definitely notice that supports and resistances are not exact one specific price point to the decimal. It is more of, I would say, a range like this, like a cluster. So I always prefer giving some buffers room, some space to prices to mark these supports and resistances. So as I open my chart, around 9 to 12 months of information, this is the daily chart of Kotak, and I will be marking with the help of these zones, supports and resistance. So I start from this point, and I notice here that the market recently bounced back from this level. Okay, if I extend this level, it doesn't actually match with any highs or lows in the past. Nevertheless, this has been the recent bounce back, so I'll keep it something like this. You never know, as market comes back, it can find some support again. Moving like this on the left hand side of the chart, I can find this low matches with this high. Let's zoom in and check. For the newcomers, for the newbies, for the amateurs who are starting off, to set your eyes, you can always toggle between the line chart and the candlestick or any other bar chart or any different type of charts that you're using. A line chart always is easier to analyze because it's one simple line, and so you can find that this was the low. Once the low got breached, it bounced back, faced resistance exactly from that level, and it came down. So to mark this, let's say I will give it a different color so that I can differentiate. Now this guy, this level should act as a zone of resistance. Ideally should act as a zone of resistance, right? Now if I extend this slightly further to find its more strength, I find that it has gone through the body of the candles. It doesn't actually meet the highs and lows so well, so I'm going to restrict its timeline like this, these lows and these highs. But this level of 1880, 1905, 1910 is an important zone for Kotak Bank from a daily perspective. See, I'm essentially drawing horizontal trend lines. I would say horizontal zones. Trend lines, when you read about trend lines, when you think about trend lines, you think about angular lines like this as supports, angular line like this for resistance. They are good, they are fine, but for purpose of supports and resistance, I've found time and again that these angular lines are very easy to be broken and to be proven wrong also, as in they break and they again move inside them. So I'll rather have more confidence in these horizontal zones of supports and resistance. And for those angular lines, I actually use parallel channels using the RSI. That's a completely different technique altogether. Nevertheless, coming back to this, with this concept, with this approach, we can mark the high, but there's nothing there, so I'm not going to mark it. This high comes very close to this high, something like this. Doesn't make much sense. I can make something like this wide, but this is way too wide for me to mark a resistance. You can experiment like this. You can do try and error as much as possible. Now over here, I can see a small little high and low playing out. I can see here very clearly the high comes back to the low, creates a low, and at this point, as it bounces back, we know that this uptrend is intact, and it was intact. It continued further up. So this was also a very nice short-term level, which kind of didn't play out well in the future. There's not much to play out in the future because the market took this level effortlessly on the downside. And on the upside also, it did not show any resistance. At this point of time was a little bit of short-term supply point, resistance, proven support. You can expect support, but none of that came. You can expect resistance, but none of them came. So I feel that this level had more to do with this part of the market rather than this part. So I'm going to let go of it as of now. Like this, you can use this tool to draw clusters of supports and resistances. When you find price in a consolidation, there might be spikes on the up and down like this. This is where your range becomes a little higher, or I would say wider. So if you draw something like this, turn it into a line chart and see, yeah, most of the time it is touching it. You can extend it like this, and you can say that this has been a really important breakout point. This was like a breakout failure. This was one level. Now this was a level where the markets didn't spend too much time. Let's compare these two red zones. If you compare the one at the lower end, it has way more multiple touches. It is a level where the markets have spent a lot of time and it has faced resistance. But when you come here, it's more like a trap where the market broke out, saw some momentum on the upside, but completely trapped it. So this is more like a trap price, but this is more where a lot of shares have exchanged hands. So this stands to be more powerful, I would say, the one on the lower. This was more like an exception. Like this, you can do, if you want to find levels on the higher time frames, you can do that. In fact, in this chart, I can very clearly see that the recent support of Kotak Bank, which we saw the bounce back in Jan 21, it matches beautifully well with the highs of December 2019 and Jan-Feb highs 20. This is a very beautiful example of where erstwhile resistances, and not just one level resistance, it is a price level where the stock couldn't break out on the upside for almost 2.5 to 3 months. And now we are at supports, and the supports held, which means that this is a very, very important level. And ideally we can expect that prices should from here on keep its trajectory on the upside like this. However, if it fails to do so, and if we see a breakdown of this level eventually, then this can lead to a serious correction. This can lead to a serious damage to the underlying trend of the market, because as long as highs and lows hold, the uptrend is likely to continue. Like this, from a larger perspective, from longer time frame. Now depends on which time frame you're analyzing, your short term or the medium term, etc. You will choose the daily charts or the weekly charts. And time and again, you will find these highs becoming lows. Okay, and as long as this is more of an uptrending chart, so highs becoming lows is a very obvious example we can see every time. See over here also. There you go. Highs, breakout, couldn't sustain up, comes down, creates supports, breaks. So this is exactly what I was saying here. So when we have a well-defined resistance, the well-defined resistance has proven itself as support and support. Ideally, it should give you a continuation on the upside, but on the other hand, if it breaks down, that can lead to some serious damage to the trend. That's exactly what I was mentioning at this end. As of now, for Kotak Bank, I would suggest that this bounce back has been quite encouraging with the overall markets, and we are quite far off from breaking these lows again. So this concept of drawing horizontal supports and resistances is essentially to find out a confirmation whether the uptrend is likely to be intact or not. I'm using the TradingView here, and they have a very good way of plotting them on that specific time frame. So over here, this is the weekly chart, so I don't want to see them on the daily or hourly, so I can mark them like this in terms of visibility, or else you'll find the same zones across all the time frames. I generally do not prefer that, so I keep them to that specific time frame. Now, to add one more aspect to it, one more simple aspect to it, not necessarily always needed, is that of volume profile. Say for example, we are looking at the rally from this point to this point. Okay, and we would like to know that at which zone the volumes were the highest, at which price the maximum number of shares exchanged hands. So in TradingView, under indicators, there is a separate section of volume profile. And what I generally always use is over here, I use a fixed range volume profile. The fixed range volume profile allows me to fix the range. So I come to this lowest point and I go all the way to the highest point. So this range is fixed for me. I fixed this range and I want to see the volume profile of this fixed range. And these histograms on the vertical scale clearly shows where the maximum volumes have taken place. And this red line is called the POC, point of control, wherein the maximum volumes is marked. So for Kotak Bank, we can say that in this run up, a huge amount of, or the maximum amount of volumes happened close to that 1900, 1880, 1900 zone. And that more or less marks or comes very, very close to this level that we marked some time back. And actually, after the break of this level, did we see a real sharp sell-off in the stock. So this level is going to act as very important going forward on the upside as resistance, number one. Number two, apart from that, as we look down, we see that there's some amount of volumes down here. Where is this cluster? Clusters are always where you will find more volume bars, because that is where the prices spend a lot of time. So this is one level. Now, the objective of showing you this is, it would have been great if you had found a larger volume bar or a point of control somewhere here. What I mean is, this support, or on the other way, if a point of control or higher volumes confluences with your anticipated support, that support becomes stronger. To understand this, let's say we come here. I'm going to make this volume profile visibility only on the daily chart. We come to the weekly chart. In the weekly chart, we found a beautiful confluence, right? We found this resistance is acting as current support. And let's say in this case now, if I want to find the volume profile of the entire move from March to the recent highs of Kotak Bank, this entire run up. Now in this entire run up, the max volumes happened here because the maximum amount of times the stock spent down here. So it's around 1320. The stock is at 1860. We should not say 1320 is the support. It might act as a support if prices comes down. And also notice that now that the highs acted as lows and a beautiful support, there was very shallow volumes. What I'm trying to explain here is, do not expect that the volume profile or the maximum volume wherever it has happened will always act as a support or resistance. Need not always act as a support or resistance. But when we drew this, if we had a point of control somewhere here, or if we had some amount of larger horizontal volumes up here, then we could have had more confidence in saying that this level of 1700 is a very, very strong support. This very, very strong support, we could have said, if there was a confluence between price and volumes. This confluence is not going to happen all the time. It doesn't come all the time. It doesn't necessarily come all the time, but when it comes, it gives us more confidence. That's it. So the objective of drawing the volume profile is to help us understand where the maximum trades have exchanged, where the maximum shares have exchanged hands. And with that, your price studies that you have done, whether they confluence or not. So this is a simple way. I think this will be useful for you. For Rohan, of course, you should practice. Now, you will get better with practice and with time. Over and over again, you have to redraw them. Few will go beautifully right. Few of them will not at all pay respect to your homework, to your work, to your anticipation. But that's exactly the part of the game. So continue doing that, and slowly you'll get a good grip of it, and you'll find that when and where these prices meet and those previous highs, or let's say previous lows, have shown tendency to become highs, you will get a very, very good move, either up to down or down to up. This is how you can mark supports and resistances on the chart. I hope this was useful. Do share your comments and your feedbacks. Till then, trade well and take care.